We've got the U.S. dollar continuing to weaken, and bond interest rates moving up, and gold continues to make some pretty volatile swings. Now, you may not find any of those three directly inside your investment portfolio, but if you get down to it, they all three have an incredible amount of influence on the world economy. We caught up with Dennis Gartman recently at the Chicago Mercantile Exchange. He is editor of the investment letter that bears his name. Dennis Gartman is with us. Let's start, Dennis, with interest rates because we're above the Eurodollar pit here at the CME. What are rates telling us about the overall economy in the U.S.?
Well, it depends which way you want to look at rates. Short rates, the Fed clearly has told us they're not going to raise rates. They have no intention to until they see real strong economic data on a consistent basis, probably meaning a sharp decline in unemployment rates before they're going to tighten.
But do you think the market believes it, though?
Oh, I think the market absolutely believes it. Absolutely believes it, because the yield curve is extraordinarily positively sloped and has no intention of becoming even less so. It probably will become more positively sloped. So the long end of the curve, where the Fed doesn't have capability of mandating where rates go, is telling you it thinks rates are going to go higher. The short end of the curve believes that the Fed has control over the short end, and it's going to continue to hold rates at the low end.
In your mind, what could that do to the economy and the economic recovery that's just gaining its footing right now?
Well, quite honestly, a positive slope to the yield curve is the best thing that can happen to the banking industry. As I like to say, positive slopes to the yield curve make banking geniuses out of idiots.
Right.
Overcomes a lot of problems, and it allows banks to be more aggressive in their lending patterns. So I suspect that what it really does mean is stronger economic circumstances.
Let's talk about the U.S. dollar, because that has seen some wild swings in this marketplace. Is this a big concern for international investors?
Oh, absolutely. I like to think of somebody sitting in the middle of an ocean with the ability to move capital at a whim. Where does he go? And for a long, consistent period of time, they looked at the United States dollar, bought assets, and realized that as a reserve, that currency was strong. Now you've got an administration who denigrates the dollar and who really doesn't seem too disturbed about the declining value of the dollar. So a foreign investor is looking around and saying, golly day, what I'm buying, even if the price goes up, I can get hurt on the dollar. His propensity, and I think economics is a study of propensity, his propensity to add to his positions, relatively minimal.
Weak dollar normally helps the price of gold. You haven't really seen gold move extremely positive within the past couple of weeks.
Well, over the course of the past year and a half, gold has actually moved up quite a bit. I think the low was 283, if I'm not mistaken, and now we're suddenly up into the high $300.
375 or so.
To me, that's a relatively large move. Is it moving as radically and as violently as it did back in the 70s and the 80s? No, but it has been a consistent upward path, and it's probably going to continue to be that way as long as the dollar continues to decline.
Dennis Gartman is the editor of the Gartman letter.